Welcome to the Lend Academy podcast, episode number 127. This is your host, Peter Renton, founder of Lend Academy and co-founder of Lendit. Today's episode is sponsored by AlphaFlow. Let professional investment managers build you a personal portfolio of short-term, high-yield real estate loans. With AlphaFlow optimized portfolios, your investment of as little as $10,000 is diversified across at least 15 states and 75 to 100 loans. Investors earn 8 to 10% average annualized returns with no picking, waiting, or missing out on the best loans. Go to www.alphaflow.com/lendacademy to get started. Today on the show, I'm delighted to welcome Charles Egly. He is the CEO and co-founder of Younited Credit. Now, Younited Credit are based in Paris. They've been around for many years, and they're actually the largest online lender in continental Europe. And they've built a great business where they're not just operating in France now, they're also operating in Italy as well as Spain. So we talk a little bit about that. We talk about the business model, what makes them unique, how they've been able to grow their business, what it's been like to expand beyond their home country, and some of the differences between France and these other countries. And we also talk about the future and where he sees his business going. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Charles.
Thank you, Peter.
Okay, so let's get started. I like to get these things kicked off with giving the listeners a little bit of background about yourself and what you've done in your career before you started Younited Credit.
Okay, so in a few words, so before I co-founded Younited Credit, I worked at BNP Paribas Investment Banking during 7 years. First as an analyst in the private equity department, then as a product developer in the asset management department in Hong Kong, and during the 4 last years as a credit derivative structure in the fixed income department. Okay.
So then it sounds like you went from there to founding Younited Credit. What was the story behind that? Why did you decide to go and leave a large bank and go and create a startup in a fairly new area at that stage? We're talking like back in 2009. So what was the story behind that?
So very simply, I had to pay my taxes. So I had the savings to pay for them, but I did not want to use it. So for me, it was easier to apply for short-term credits. So I quickly applied for it, and I got a revolving credit with a 40% APR. So I took it, but after a few weeks, I realized that the rate was very high, and my return on my savings in parallel was very low. So basically, I began to study the models that existed in the US and in the UK. So I discovered this platform opportunity, and I decided to partner with my partner and to launch Younited Credit.
Okay. So I want to give the listeners a little bit of sense of what what the banking industry is like. I mean, we talk about other countries like here in the US where the banks in the financial crisis pretty much exited the personal loan business. And it sounds like in France there was a personal loan business with banks, but it was just expensive. I mean, what is the banking system, or what was the banking system like then? And where did you see the opportunity just on pricing, or was it something else?
So just to give you a bit of a background, so the French market is the third in Europe in terms of outstanding assets. So UK and Germany are the biggest. So the French one is the third. It's more than 150 billion euro of outstanding loans. So I'm just talking about consumer loans, of course. But the issue with the French market is that it's very concentrated. So you have 4 major banks that have the majority of the market. And those 4 major banks in France are also the leaders in continental Europe. So it's a very concentrated and very competitive market that we have in France. However, in terms of risk pricing and user experience, they are not that good. So we thought that there was a big opportunity to disrupt the market.
Okay. And so my understanding is that in France, you need, if you're going to do a consumer lending business, you need to have a banking license. So did you have to obtain this banking license, before you started operating, or tell us about that process?
Yeah, exactly. If you want to operate market lending, market lending platform, you need to have a banking license. So it was, for us, it was a very long road. It took us 2 years to negotiate with the regulators and to obtain our credit institution license. Mm-hmm. But of course, it's a huge asset that we have now, because we can passport this license in all European countries.
Right.
So of course, it took us 2 years at the very beginning, but now, it's very easy to duplicate the model and to launch our platform in all European countries.
Right. Well, let's just, I want to stick with your French business for right now, and just want to talk a little bit about, who are the typical borrowers that come to your platform, and what are they using the money for?
So basically, 1/3 of them apply for loans to buy vehicles. Mm-hmm. So mostly second-hand car. Another third apply for house improvement, house refurbishment. Yep. And the last third is for treasury cash needs. Okay.
Right. Okay. And then, what are how are your loans comparable to the banks? What are the typical pricing and loan terms that you're offering?
So we offer loans ranging from 1,000 euro to 40,000 euro. Mm-hmm. Maturities range from 2 years to 6 years. And the APR that we propose are on average between 50 and 100 bips below the market average.
Okay, so below the banks?
Below credit institution, banks, the market average. So basically, we are among the most competitive lenders.
Okay, so then what about in the investor side of the business? Because I know this, when we've chatted before about, that you have sort of a fairly unique structure when it comes to, peer-to-peer lending platforms. Firstly, maybe let's just talk about who are the investors that are coming to your platform.
So the biggest part of the money comes, of course, from institutional investors. Mm-hmm. So basically insurance companies, small European banks, asset managers, small French pension funds, and family offices. Of course, we have some retail investors, but they are, qualified retail investors. But as of today, it's mostly institutional money.
Okay. And then how are you structuring your investor offerings? My understanding is that you have these separate SPVs, special purpose vehicles, that you're offering for the different risk levels, the loan grades you offer. Can you just tell us a little bit about how you're structuring that?
Exactly. So in France, as of today, we have 3 SPVs. So one for the A borrower category, another one for the B, and another one for the C. And for Italy, we have one single SPV with A, B, and C. And for Spain, we also have one single SPV with ABC. The idea for France is to create also a single SPV, so that we have one SPV per country.
Okay. So right now you've split it up into 3, but you're planning on changing that in the near future. Is that correct?
Exactly.
Okay. And then I'm curious about, I just want to find out about your business model. I mean, we know about how the typical platform business models are, where you take an origination fee and then also a servicing fee on the investor side. Is that how it works with you guys, or how is it exactly you guys make money?
Yeah, definitely. On average, we have a borrower upfront fee that we charge upfront of 4% of the loan amount.
Mm-hmm.
On top of that, we also distribute optional insurance, job loss insurance, death insurance. And as a distributor, we share revenues with the insurer, which is MetLife. And we also have a management fee within the SPV. So those are the three items of our net banking income.
Okay. That's interesting. I wasn't aware of the insurance piece. So when someone takes out a loan, then
Yep.
is it right at that moment then you say, hey, you've taken out this, 30,000 euro loan, you should get some sort of, job loss insurance or life insurance. Is that, you're doing that at that same time?
Exactly. Because this is how the French, the Italian, and the Spanish markets are structured. So in those countries, consumers really like to have the option to take an insurance. But it's optional. It's not mandatory at all.
Right.
In France, it's mandatory for mortgage, but for consumer loan, it's just optional.
Right. Okay, that makes sense. So then, I just wanted to go back into the three SPVs. Can you give us a sense on the historical yield or the returns to investors that we're talking about with the A Tron or the A SPV, B and C?
So basically, it ranges from 2 to 4%. So 2% for the A and 3 to 4% for the B and the C.
Okay.
Of course, there are a bit of volatility, but the idea is really to target, on average, 3%.
Okay. And the investors, I mean, that's a lot lower than the US. It's even lower than the UK. And is that investors obviously don't have that meets their expectations, I take it. The investors have lower expectations when it comes to yield in France than they do in other parts of Europe?
Yeah, of course, because, in Europe, for instance, the ECB refinancing rate is minus 0.4%.
Right, I know.
So, which is super low. I mean, it's even negative.
Right.
And also, European countries, the treasury bonds are super low. For instance, in France, the 5-year treasury yield is below 0%. So really the risk-free assets do not yield anything in continental Europe.
Right.
That's why the yield that we are offering are super interesting.
Right. Okay. That makes sense. So then who do you view as your competition in France? Because I know that, when I've been to Paris and met with lots of different marketplace lending platforms, everyone else is in the small business space, it seems like. And you guys are, it feels like, alone in the consumer space. So who do you see as your competitors?
So our competitors are, traditional banks and, traditional credit institutions. So it's very, for us, the competitors and the competition is very simple. We are fighting against the banks.
Right. Okay, that makes sense. So I know that when you launched the company, and excuse my pronunciation here, but it was called Crédit Union, and you rebranded. I think it was 2015 or 2014. You rebranded to Younited Credit. Explain what does Crédit Union mean, and in English, and why the change of brand?
Okay, so Crédit Union means, prêt, it means loan, and union, it means union.
Right.
But the thing is that the pronunciation is super French, and
Right.
it's very hard, for other people, especially Italian, Spanish, English, American, or German, to pronounce it.
Right.
Whereas, Younited Credit is fairly simple. And on top of that, credit is a noun that is known everywhere. So that's why when we decided to deploy the platform in other countries, we decided at the same time to rebrand the platform.
Right. Okay. That makes sense. So your first country was it Italy? I mean, can you tell us a little bit, like when did you start in Italy and where are you at there?
So Italy, so we started Italy in March 2016. So as of today, we have originated almost 60 million euro in loans in Italy. Spain, we started in March 2017, and we originated a bit less than 15 million euro in loans.
Okay. And so what are the differences between the three countries that you're operating in now? I mean, are the yields higher in those two other countries? Obviously, they're not as strong economically as France. I don't know what the treasury rates are in those countries, but are you offering a similar product with a higher yield, or what is the differences?
For instance, the market average APR in Italy is 2 times higher than in France.
Right.
And in Spain, it's 2.5 times higher. So they are, in those two countries, the spread is much wider. So of course, it's easier, to price our own loans and to be competitive. France is, of course, one of the most competitive markets in Europe. So all other countries are simpler, I would say.
Okay. Right. So then are you trying to focus on Italian investors, or are your French investors investing in these other countries? Or who's on the other side of it?
So, of course, we have a big part of our investors that are French, because, of course, we started with France. But we have more and more, international lenders. We have, for instance, a Dutch insurance company named Aegon. We have European banks. We don't have as of today, we don't have Italian or Spanish institutional investors. But of course, our SPVs can be subscribed by any institutional investor.
Okay. So I want to switch gears a little bit and talk about technology. And what's your approach to technology? How do you feel like you have an advantage here over the banks? Just tell us about your approach to technology in your business.
Okay, so of course, the user experience is super important, to be able to attract good quality customers and to disrupt the sector. So of course, we first invested in our, website, mobile site, user experience. But of course, there is more than that. We are a process-driven and data-driven platform, because we want, to risk price all our loans. And to do risk pricing, you're obliged to be super precise in terms of data utilization and the writing process. Mm-hmm. So we invested a lot in our CRM, in our algorithm. For instance, in France, we are almost the only one using machine learning and deep learning algorithm to score our applicants. So this is very disruptive. On top of that, we also added algorithm to predict soft fraud as well. So we invested a lot in the tech. For instance, out of the 190 employees that we have in the 3 countries, 60 are developers and data scientists.
Okay, interesting.
So it's 1/3 of the staff.
Right. And just on the data that you're using, are you capturing mainly traditional credit data? Are you using, alternative data as well? Or what kinds of data are you feeding into your algorithms?
So in France, there is no credit bureau. So scoring applicants was a huge challenge when we started. So that's why we had, to use, I would say, a good mix of conventional data and also unconventional data. For instance, we track the IP address of the applicants. We use also the timing, the day in the week and the hour at which the application is made. We also track how many minutes the applicants stay on the website, if he goes to the Q&A, how many minutes he stay on that page. So we track many stuff, so unconventional data that helps us to better score our applicants.
Right, interesting. So I'm curious about the impact of Brexit, or if there's been any. I mean, we obviously, we've talked about it in the UK, and it's it has it seems like hasn't had a huge impact there. But I'm just curious from your perspective, as you talk to investors, are you finding that it's been a good thing for your business? Because obviously France is in Europe and not leaving the European Union, at least not anytime soon. So has there been any impact on your business?
Okay, so for Europe in general, it's not necessarily a good news, but for all countries that stay within the European Union, it's a good news, because those countries will be able to attract businesses or opportunities leaving the UK.
Right.
So it will help, boost the GDP and decrease, of course, the unemployment rates. So I would say for France, Italy, and Spain, it's either it's neutral or it's good. So overall, it's a good thing. But then, as a pan-European platform, we also studied the opportunity to go to the UK, to launch our platform in the UK. Mm-hmm. However, when it comes to consumer loan, the biggest risk is the unemployment rate increase. Mm-hmm. And with the Brexit, we see a risk that the unemployment rate in the UK increased a lot. So that's why we will not launch our platform in the UK in the coming 2 years.
Right. Okay, that makes sense. So how has the growth been over the last couple of years? Because I noticed, like in the United States, there's been, there was a pretty, well-known pullback from investors in 2016. I mean, we had issues with defaults. We had the lending club issues, and there was a general pullback. And obviously we had Brexit in the UK. But have you found that the last couple of years has been steady growth for you? Are you being impacted in any way?
So honestly, we did not see any impact on our business. But of course, we are much smaller than a lending club. The Brexit as well did not impact our model. Mm-hmm. So, and on top of that, all the investors we have are long-term lenders. So we don't have any hedge fund. So our money is less volatile. So basically, we did not see any impacts of what happened in the US, which is good news.
Yes, that is good news.
And also, there is a major difference with the UK and in the US platforms. We are fully regulated by the ECB and the French regulators. So the institutional lenders see us as a more stable platform, I would say.
Right. Yeah, that makes sense. Speaking of that, speaking of stable platforms, you guys raised a 40 million euro equity round just a few weeks ago. Yeah. And I'd like to. How was that process? I mean, obviously, anytime you raise that amount of money, it's not an easy process. But it's been challenging for companies to raise money in recent years. And I wanted to see how that round went and what you're going to be using the money for.
So basically, the process took several months. So 40 million euro, it's a lot of money. But as we are leaders, as we are the leader in France and one of the biggest fintech in continental Europe, there is always money, for leading actor. So that's why it was not that difficult to raise that amount of money. Mm-hmm. And also we have good projects to use that money. European expansion, technology investment, data investment. So, the equity story made lots of sense when we saw equity investors to raise that money.
Okay. And where are you on the pathway towards profitability? I mean, are you profitable now? Are you going to be profitable shortly? Is this going to see you through to profitability? Where are you at?
So we're still investing a lot in our growth. So, I mean, our revenues are still growing each year by 100%. So we invest a lot. Mm-hmm. However, we lose, this year we will lose less money than the previous year with a 100% revenue growth. So we should be profitable in 1 year and a half or 2 years.
Okay. Okay. And so you recently, earlier this year, you crossed 500 million euros in total loans issued. How long will you be able to keep up this 100% growth? It gets harder the bigger you get to double every year. I mean,
normally we should keep this traction till 2020.
Okay.
But because we also have lots of growth opportunity with the European expansion.
Right.
So for us, it's quite, I would say, easy to keep up that growth speed. Okay,
so then let's just talk about that. We're almost out of time, but I do want to talk about your expansion. I mean, you're in 3 countries now. There's obviously many more countries you could go into. What are your plans for continued expansion? What is like? Can you share your plans for next year or beyond?
Yeah, the idea is really to build a pan-European platform. Next year we will launch 2 new countries, and this is really, what's really exciting about Europe is that you have a common market with very specific markets as well. So you can do lots of best practice sharings among the countries. So this is very exciting, to build a pan-European product, because you can pick in each country, you can pick the good practices to build, a super nice product. So this is very exciting.
Mm-hmm. Okay, well, we're going to have to leave it there, but I really appreciate you coming on the show today, Charles.
Thanks a lot, Peter. It was a pleasure to exchange with you.
Okay, see ya.
Bye.
One of the things that our industry has really been lacking to a large extent are companies looking to expand beyond their home borders. Now, we have Funding Circle, obviously, is the most famous example. They're in the US, the UK, and a couple of countries in continental Europe. But beyond that, we really have not seen this. And so Younited Credit is really the largest consumer lender we have globally that's operating in multiple countries, and with plans, obviously, to go beyond that. I feel like, for the industry, as it matures, needs to have some of these leading companies be cross-border. I mean, all of the major banks and insurance companies in the world operate in multiple countries, and I feel like we have lagged behind, I think, in that area for some time. So I would have thought by now, if you asked me 5 years ago, I would have thought by now that many companies, US companies, would be in multiple countries, but we just haven't seen that. So I'm fascinated by what Charles and his team has been able to do at Younited Credit, and I certainly wish them all the best as they continue their global expansion. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by AlphaFlow, the first automated real estate investment service founded and operated by professional investment managers who build you a diversified portfolio of 75 to 100 real estate loans. Ray Stern, the CEO of AlphaFlow, was a guest on our recent podcast episode number 122. Using analytics, data, and institutional best practices, AlphaFlow is revolutionizing the way we access and invest in professionally managed real estate portfolios. Go to alphaflow.com/lendacademy to find out more.